Think you need millions to retire? Think again. Colombia, Bali, Dubai, Northern Cyprus, Georgia. These are just a few of these places that I have been looking at in the last 12 to 18 months. Some of them I went forward and made an investment. Others I'm just actively on the ground. And one of them I decided is not really for me. And you'll see why. And you're a big fan of that place as well. But retirement is not necessarily a fantasy. It can be a reality and it can definitely happen sooner than you'd expect. So stay tuned. We're going to go through all the different countries right now with a few case studies. Hi, this is Jeremy from the Millionaire Migrant. I left the UK in my 20s and I acquired other nationalities, multiple residencies, multiple properties in different parts of the world. But through this, I have developed a network of ultra high net worth and high net worth individuals and tax advisors and lawyers and real estate advisors that mean that every single day I'll be able to share with you all the information I'm getting from a very high level and also from personal experiences to help you how to optimize tax, how to protect your wealth, and how to diversify yourself and take advantage of this very uncertain world. Now, being able to retire and not worry about money is about knowing that you've got passive income as well as your active income. Active being the job that you have or the business that you have. And I've found that over the last year and a half, some of the revenue I've generated from passive income sources has matched or in some cases exceeded what I've done in my active income businesses. Now, how much you need really depends on your lifestyle. I didn't have the levels of income that I have right now, and I started out with much smaller. But one of the things that helped me to achieve where I am today is being very careful about what I was spending many years ago. We go back 5, 10, 15, 20, 25 years ago. While everyone else was spending money on stuff that probably was depreciating assets or not really worth the money invested, I was being very careful and just managing to be making sure that I was the landlord rather than the tenant. Now, let's go through some of the different asset classes and some of the ways that you can maximize your return so you can actually try and retire a lot earlier. Now, you've got your stocks, you've got your real estate, you've got your other asset classes such as your gold, for example, and your crypto. Typically, we're looking at these four, and then you've got sometimes other different options too. But let's look at these four. In terms of stocks, the problem with stocks is they're volatile. I wouldn't use leverage for that, but you can use leverage for real estate. The problem is that when you start to go to emerging markets, which typically have higher yields and higher growth trajectories, they're going to be in markets where even if you did manage to get leverage, they're going to be at very unreasonable rates. So the sweet spot that you want to be at in terms of real estate is places like the UAE or Georgia, where you can get lending at very attractive rates. So for example, the UAE is around 4.5%, Georgia is around 7%, but the yields you're getting is, let's say in the UAE at 4.5%, you should be looking to be able to get 8, 9, and in some cases 12 and 15% if you're really lucky, or you do your groundwork. If you go to Georgia, I saw properties there recently that were generating 11 to 12%. But what happens is that once you build a credit profile, then afterwards you can start to use the leverage more and more, and then you can really compound your returns. Definitely don't use it for stocks. This is what has wiped out a lot of people. It's not something you want to get involved in. I would use stocks as basically, I'm a bit vanilla, but I have other people who are more professional, who are a little bit more alpha. But I would say just use your index trackers for the stuff that you don't want to focus about. And then if you happen to meet, I'm not too sure about retail banks, premier banks, private and investment banks, but these are the different strata you can get in terms of banks. And I can tell you, I've tried every single one. And sometimes the higher threshold you have and the more you put down to be able to access those products, you don't always get the returns that you were expecting to get. So that's why I would stick to your index trackers, which basically takes exposure to the whole market as opposed to individual stocks. And then afterwards, you will deal with some of those banks in particular departments. So you can do FX trades, or you can do your alphas who are day traders. But I use all of it, and I use real estate, and I do crypto, and I do gold, and I just try and remain as diversified as possible. So as much as I might have regret of, I should have put more money in it, I never have the regret of, I should have had at least taken some exposure. You'll see a lot of the videos that I do are real estate heavy. Definitely, there are a lot more people who are pro stocks. Don't listen to anyone who is trying to sell a stock trading course or stock education course, say don't invest in real estate. Like, that's not someone that is giving you a truly impartial advice. I will try to give you as much as everything, but the reason I do more real estate is because it genuinely was a key influence in how I was be able to get where I am today. Not only in terms of my career I ended up working through many different international companies, private companies, joint private companies, and also sovereign wealth funds in terms of real estate. But I also personally started investing in it, flipping properties, buying properties just when I was in my early 20s. And I've started doing it in many different countries. And now 11 different countries. I've invested in 30 different properties. I've got, I think, 3-4 different transactions going through right now as I speak. I have also realized to diversify, and obviously I've lost money, which makes me much smarter than I was. And I believe that by losing money, these are the best experiences to be able to take advantage of this, whether it's real estate, stocks, crypto, or gold. Gold, I haven't lost money yet. And I really feel that gold is a really strong play you should be looking at in 2025. The one mantra I have learned from real estate is a mantra that I only learned recently in the Middle East a couple of years ago, is that there is an Arabic expression that basically says that real estate gets sick, but it never dies. And I think this is very important because stocks can get sick and can die, right? Depending on the price you bought to where you are today. And you will have to basically sit on that until it corrects itself. But the difference with real estate is that you only crystallize your gain or your loss when you sell it. So if you're at a lower mark to market to where you are right now in terms of the price is lower than what you paid, you just ride it out. And even properties that I bought at the wrong time, there's only one time where I was like, you know what, this is never going to get back to where I bought it at. Let me just crystallize my loss. And minus the rental income that I got over that period of time, I still wasn't even down that much anyway. You won't get that with stocks. You'll just have to sit on it and see other opportunities move by, because a lot of the stocks obviously don't give you some kind of yield or dividend. A recent transaction that I am in the process of completing I've already done the down payment, the reservation, and now we are going to complete by the end of this month, was a property that we looked at in Colombia. And so we're going to use this one for the case of this to kind of use a case study so that you can see how we did it. And we will do a full video showing the before, during, after, a proper analysis in another video that will be coming once we complete on the property. This property was in Colombia. The reason why we did in Colombia is because when I visited there, I noticed that there's a huge amount of inflow of tourists and digital nomads going into that country. It is really taking off, and I can see that being the case going forward. The other thing is my wife is also Colombian, so I felt like at some point I should really have a property in there. If I've got all these properties in other countries, let me put it in Colombia. Also, knowing you have that local knowledge, people on the ground, it's something that why wouldn't you want to take advantage of? Now, when we looked at the properties in there, we identified that the key places where all the digital nomads and expats were moving to, who, by the way, are obviously, because they're digital nomads, receiving typically in dollars. So if they're doing Fiverr and Upwork contracts, they're getting in dollars. If they're getting in dollars, they're going to be good tenants that will pay us even in dollar terms, whether it's an Airbnb or long term. And that is attractive, knowing that you bought the property in pesos, which again, when I bought the property, it was a very, very good rate. And this also made the overall investment proposition more attractive. Now, we ended up buying in Poblado. The other one was Laureles. Both of them are really good. Laureles was actually voted the coolest neighborhood in the world in 2023 by Time Out magazine. We ended up doing Poblado just because that was where the opportunity was. Poblado is very attractive. It's if you look at the rental yield, it's looking like 9.5%. The property that I have bought, as per our estimates, putting it either on long term or on short term, we're looking at around 9 to 10% as well. The proof will be in the pudding. Maybe I bought a really bad deal, but I'll be transparent as possible to be able to show you, and we'll be able to look at the rental income, let's say 6 months down the line. Maybe I was right, maybe I was wrong, but fingers crossed. Another place I looked at, but I didn't move forward with, was Bali. So I have friends of mine that bought in Bali, and I did a lot of research last summer. I was on holiday in the south of France and ended up speaking with, let's say, 3 or 4 different people at different levels of investment into Bali. And we spoke to them about different options there, trying to understand, because this is the thing, is like, because I've invested in different countries, you know, some of the countries I've done business with for my employers, which would be developers at that time, I didn't actually invest there. So I'm talking about Italy and Morocco, Egypt and Spain. Those are countries that I didn't invest in, but they are countries. France was another one. But because of working for those countries, and there was others as well, but let's just use those because the other ones were a little bit more exotic. But I understood a little bit how the process works in terms of the data, transactions, the legal, and so on, the finance and the debt available as well. But as a result of that experience of working in those countries, it also meant that I'm very curious about how the other countries work. The key thing about Bali in Indonesia is the fact that it is leasehold properties. So what's happening is that the property is being held by an Indonesian local, and then you have it on a 25-year lease. Now you're able to extend it up to 35 years, but it gets a little bit complicated in terms of how you want to buy that property. And ultimately, I just felt I'm never really comfortable with leasehold. We have leasehold in the UK, but it's usually 99-year leases, but it's not 25-year leases. The problem I have with that is that property is always a long-term investment. At 25 years, that's not that long. And 25 years gets even shortened because if you think it on a 25-year term, by the time you get to 12 and a half years, you're going downhill, everything there. Everything is against you because it's all going in favor of the person who ultimately owns the property, and that will be used against you by anyone who's looking to buy. So now you're looking at 12 and a half years. I've owned properties for 17 years, 18 years. 12 and a half years is a very short cycle. And that was my main issue. Apart from the fact that obviously, ultimately, I didn't own a property, I was leasing it from someone. So Bali is a very short-term in and out type of game. The yields are really good. I don't deny that. It's really good yields. You're looking at probably 15%, which is really, really high. But if I was to compare it to other markets, and by the way, and then there isn't mortgages and financing there either. So I get that for a lot of people it's very attractive, but how many of them are actually looking to do it for themselves, right? So if you, I mean, look, it's a great place, Bali. I mean, I haven't been there since it really changed. So I went there, I think it was like late 2000s. I know it's really cool now. I mean, it was cool back then, but it's much cooler right now. It's really on the map and loads of people, but it's having a lot of problem with infrastructure, traffic. And as I said, even if you like it, it doesn't mean that you should buy it. Another big principle that I have learned from really investing in real estate for 22 years in multiple different countries and doing very, very well on the grand scale of things, is the properties that I went in with my heart, I did much, much worse in terms of my return on my investment than doing it with my head. So if you're going to Bali and you want to use it, I get that. That's fine. You want to run your own B&B. The problem is that if you're doing it as a pure investment, there's just better countries out there where you can get leverage and you can borrow at a good rate, and you can rent it at a good rate, long-term and short-term. But on top of this, you own the freehold and you're not limited to 12 years. And that's why, for me, one of the reasons why I didn't move forward with Bali. Again, the infrastructure is an issue. And obviously, you want to be looking further south because Canggu is backed up. Now Ubud is backed up. That was one of the reasons that I stepped away from it. I just think there's other markets. Northern Cyprus is interesting. Now, I went to Cyprus many times. It used to have a citizenship by investment program. So we did a lot of clients there who did the real estate option, which was 2.5 million euros. So we have a lot of successful clients. So I know very well Cyprus. I didn't go to Northern Cyprus. I went to, was it Nicosia? And then there's the border. So I didn't cross the border. Now, Northern Cyprus is interesting because of different things, which is it's just not really known. Like it's not even Turkey as well. So you've got that. Now, why it's attractive is just property prices are really cheap. So you can live really well. They're really affordable. So I can get that for a lot of people. You can get really good returns. So you're looking at 5% to 8%. That's okay. It's not amazing. But you get to buy properties at 120,000 euros for a one-bedroom apartment, which in the grand scheme of things in Europe is very attractive. But again, it's more about the cost of living that you could live there. The other thing is you've got the casino industry and the holiday industry, but mainly the casino industry. And the only other options you have really for a casino around there in that region on the map is really to a certain extent Lebanon and then maybe Batumi in Georgia. The problem I have is that now that they have casino licenses in the UAE and Ras Al Khaimah is building basically what is the Las Vegas of the Middle East. You've got the Wynn Casino, you've got Nobu, you've got Zuma, you've got all that stuff coming in. I just see, unfortunately, a lot of business going there. Unless, of course, that becomes a higher end and more expensive type of gambling, in which case Northern Cyprus will still keep that kind of business. So, but I still believe that when you can buy at that type of price per square meter, where you're getting a one bed for 120, how big is a one bed? Probably 80 square meters, 100 square feet. When you get that price point, when you see that other places in the area have gone up so much, I think it's very, very attractive. Turkey is also inexpensive as well, and will give you a passport if you can spend $400,000. Northern Cyprus won't do that. Other factors to consider is that when you're is maximizing your profits, so you've got your top line, you want to be able to get your rental. You need to be careful of stuff that is hotel branded or has high HOA fees, so swimming pools and so on. Sometimes you've got places in the US where you have to usually buy through a company, so that's an additional cost. It will be tax efficient if you're buying multiple, but if you're doing one, not so much. You want to be looking, and then you've also got some of these countries that have a benefit of giving you a residency. So you buy a property, let's say in Colombia or Panama, for example, those will give you also benefits because you qualify to get a residency from that country, a long-term residency. Then you've got some countries that have low property taxes. For example, the UAE. The UAE, there's no property taxes. In a lot of countries, they have property taxes. If we were to give a case in point, we could look at probably the closing costs as well. So you look at the UAE, you look at Thailand, let's put them side by side. I'm very, very bullish on the UAE. I think on a macro level, on a micro level, on a tax basis, on a net migration level, on yields, on Airbnb. Like, it's not like a lot of countries now which are trying to stop Airbnb. Airbnb is for everyone, so that's really good. But if you look at Thailand as a counterpoint, there's a differentiation between foreigners and non-foreigners, which again, the UAE doesn't have. So if you're coming as a foreigner, you're already going to be paying a tax of 15% on your rent, which a local person wouldn't. So I don't really like that two-tier type of system. I don't think it really helps people. It's not like Singapore when you want to buy a property there. I can't remember how much it is, but it's like 30% plus premium you'd have to pay as a foreigner to buy that. Now, I get if you're Singaporean, it helps a Singaporean. I get that. I don't have a problem. I think everyone has to decide. It just means that I'm not Singaporean. Therefore, why should I pay that much additional in lost income just to acquire property in Singapore? Singapore is better for other things, such as the territorial tax, establishing a business, especially a tech business, banking as well, but not for property. So this is a bit of a overview of looking at property, different markets we're looking at. I was recently in Georgia. Some people told me Georgia's not as good as it was. Yes, on Airbnb it's not, but it's still a very attractive place to do business. It's something that I will probably look to come back around. But at this moment in time, I'm going to try and close out Colombia and look at other markets, probably in South America. I don't see anything really in Africa that is too interesting right now, unless you're looking to get a passport, such as Egypt, Turkey. I went there. I did some looking around on the ground. I met some very knowledgeable and decent and ethical agents in Turkey. That was good, but I just think the yields are 5.5, 6. If you're lucky, 6.5. So I just said, don't call me unless I'm getting 8, because I would like to get closer to double digits, and I appreciate you can't get it everywhere. I think Turkey is a very important place to be able to obtain a nationality. So I'm willing to take 8%. And I know that's going to take a period of time, but I think it's a buyer's market right now. And I think the market's in a bit of a lull. I'm ready to take my time. And when someone's there, let me know. The bank account's set up. The POA is ready to go. I'm ready to take a property. But meanwhile, I'm going to look at other markets, and I'll keep you invested and updated on everything that we do, and be as open as I can on everything I've done, the failures and the wins, just as much as each other. Thank you very much for watching. I'll see you on the other side.